Hi, it's Brian Decker with your Market Minute. Want to talk to you about kind of a interesting situation right now with the Fed and the markets. Beginning of the year, the markets were expecting 5 rate cuts because of stronger than expected CPI, PPI, CPI Consumer Price Index, PPI Producer Price Index, measures of inflation that, don't get me started, don't even include food and energy, but whatever. Those indicate that inflation is coming down, but coming down slowly, slower than expected. And then the other thing is the economy is being stronger than expected. Now, there's two parts of Fed policy. One is monetary policy, and the other is fiscal policy. Fiscal policy is Congress spending less and pulling back from quantitative easing to pulling back the liquidity in the market. Well, it's an election year and that's not going to happen. In fact, we're seeing the spending continue, 34 trillion and growing, and a new $1 trillion every 100 days is what we're seeing. So fiscal policy is non-existent. Monetary policy is getting rates down. Businesses like lower rates. Lower rates means that you have less cost of doing business. Small caps are particularly sensitive to this, but the expectation of lower rates is why the markets are at or near all-time highs. If it looks like we're not going to get 5 rate cuts, markets have slowed down. Now the hope and expectation is at least 3 rate cuts. Well, this morning we came out with a strong jobs number. Expectations were for 244,000 new jobs. We came in with 303,000 new jobs. What is good is bad and bad is good, meaning interest rates went up, and the expectation of new rate cuts is going down because the economy is not slowing down. Interest rates are not coming down in the bond markets. The 10-year Treasury was at 5. It peaked at 5 in last year in 2023. Now it's at 4.4. Interest rates are not coming down. Inflation's not coming down. And the economy stays strong. All of that you would think would be good for the economy and business and higher GDP numbers, but it's bad because we're not seeing the expectation of 3 rate cuts, which the markets really want. So what is good is bad and bad is good right now in the economic numbers. This is Brian Decker. Hope you have a good week.